investors are looking at dividends further out, and they're saying, oh, well, in 2 years' time, dividends will have climbed, and that's better than what I'm getting on cash. So I might have a crack at this. And then we should ask the question, who's buying? Okay, so let's go to the next slide. So this is trading activity since about 2008. And you can see there in the red, the 10-day moving average of equity value, and in the blue, the 10-year moving average of trades. And we're sort of going along there nicely, sort of in a logical pattern, and then whooshka, it takes off. Total trades per day go through the roof. Buyers and sellers, lots of activity. So the market's alive, stockbrokers making plenty. They'll be down at their Maserati dealership to pick up their new car soon. Those guys are flat out, make no bones. I've rung around and talked to them. There's a few in the family. They're busy. And so let's go and have a look at who's trading. If we can go to the next slide. And it's lunchtime, of course, so you're going to have to put your forks down and take your napkins off because we like to count. And there's the count of counting over there from Sesame Street. And if we look down column 1, we have the biggest broker, UBS, and then down we go, and we get to sort of number 10. Number 10 is Commonwealth. Number 10 is COMSEC, and it's the largest retail broker in Australia. Have a look on the second chart, and all of a sudden COMSEC's at number 7. So that's a significant increase in its position in the ratings against the big guys, and I'm going to show you how big the big guys actually are. So if we go to the next slide. So when we were counting back there, and all those who are sort of mathematically dexterous, you'll see that COMSEC rose from 11th to 9th, but at points during the period that I was measuring, they were actually 4th. A couple of days they were 4th largest broker in Australia, and a couple of days they were 5th largest broker. So this triggered my thinking. Righto, so I'll ring round the retail brokers. So I rang all my friends at Macquarie, Bells, Morgans, which is not many of them, and they told me that they were working weekends to put new clients on. Yeah, so many applications were coming in. They had to do the 100 points of ID and all the hoo-ha and carry on. They were working weekends. That's unlike them. They usually start just before 10 and head off just after 4, but no, they were working on weekends. So let's go to the next slide. Scary Mary, no, back one. Scary Mary meets status quo. Okay. So in the 14 months, 28th February to 28th of February, the average ASX value traded weekly trade was $73 billion a week. Okay, so we sort of know going back 14 months what it looked like. In the 6 weeks to the 31st of March, the weekly average ASX value traded was 39 billion. 39 billion. We've near halved the number. So the amount of money going through the market is now less. We're down 47% of the dollars going in. So the status quo is at a scary Mary moment, and we're down. And what would that look like if we charted that? Sharif, you move to the next slide. And here we have. So what this says is that our friends in the broking shop, insto broking shops at Morgan Stanley, UBS, Macquarie, Citibank, Credit Suisse, Morgans, and what have you, the blue bars are their pre-coronavirus trading, weekly traded volume, right? and the orange line is their post 31 March trades. And if you have a look right on the right-hand side, you'll see dear old COMSEC is trading about the same amount as it used to, all day, every day. The others have fallen in a heap. So what's actually happening here is that people, mums and dads and wealthy individuals have said, I'm getting rubbish returns out of my term deposits. These prices are cheap. This is a once in a lifetime. And you've got a disconnect. You've got a disconnect between what the public market, the private market's saying versus what the insto markets are saying. Now, we don't know who's right. It's a 50-50 bet, and so that's probably not a very good odds, but someone's wrong here. We go to the next slide. Okay, so the market's out there saying, oh, well, there's a whole lot of speculators out there in the marketplace. There's not. There's a whole lot of mum and dad speculators out there. There's not a whole lot of insto speculators. And if you have a look on the right-hand side of that chart. So what is making the insto people, who apparently are smarter, have more data, and what have you, they're sitting on the sidelines, albeit that we did see some people, they had to get into banks yesterday because they couldn't hold off any longer. What's making them hold off, as in the instos, and what's making mum and dads get into the marketplace? And I keep teasing you because I'm coming back to aggregate demand.